Hey guys, happy Thursday. Welcome to another exciting day in the markets. This one's going to be a good one. So if you don't have some time, come back to this video later because I'm going to go into a little more detail today. I think it's very important as the Dow, the S&P, and the Nasdaq suffering another rough day. Here's the thing. You're going to see in the headlines everywhere. And before I actually get to that, if you're a client and you're watching Jazz Wealth, or you're watching this video, then I want you to send an email to Carolyn at Jazz Wealth if you're interested in our new segment we're going to do. Is called Wine and Wealth. It's for our clients only. Come have a glass of wine with me. I'm going to teach you stuff about your personal finances and your investments that you have never learned on YouTube or anywhere else. It's not a sales pitch. It's all for our clients, completely free. And we're going to go over this because I think it's so important. You know, focusing on your investments, that's one thing. Focusing on your finances, those two are tied together. We've got to do that well. So I want to give you guys more than what you think you're supposed to get here at Jazz Wealth. So be sure to send Carolyn an email. Let her know you're interested, and we'll make sure you get the invite. Everyone's going to get the invite, but we'll make sure you're there. Can we just bump this up a little bit while we're here? Yeah. Okay. Here's the thing. You're going to see in the headlines, the Dow fell 1,000 points today. 1,000 points. Very crazy down day. You're going to see this all over the place, and it's going to make you think, you know, wow, am I doing the right thing here? Should I be taking off some of my investments too? And I'm going to tell you exactly what's going to happen here. People in the retail world are going to start taking their positions off. They're going to do the exact wrong thing at the wrong time. See, right now the stock market's moving around because these are the traders. When you go to the bank and you put some money in your checking account, your money's not there. Your money gets loaned to other people at the bank, and then it gets invested in the stock market in one fashion or another. So the people that manage that money, that's who's making all these decisions right now. A very bad example would be Wells Fargo. They royally screwed this up, and now the Federal Reserve has put a lot of restrictions on them. So to make a short story here, you're going to see a lot of headlines. As those headlines come out, think about who's watching TV. CNN, MSNBC, Fox, no matter what news channel you watch, you're going to see this. And the retail, the general public that's all at work and doing their thing, they're going to come home and go, whoa, maybe I should close some of my 401k positions. Maybe I should close some of my Roth IRA positions. They're going to start to adjust, and that's going to put more pressure on the markets. Here's what you need to be concerned about. And I want you to really think about this because I'm trying my hardest to be that person that gives you helpful tips and advice and everything. And I want to kind of share with you how Wall Street does this. So there's two ways to look at it, Wall Street and Main Street. And so what happens is if you're a short-term trader, you buy and sell things like, you know, Tesla, and you hope to make a little profit there over the couple days or a month or whatever, you're looking at Wall Street. You could care less what Main Street is doing. Main Street being normal everyday people going to work and buying stuff. Right? You're interested in Wall Street because you're trying to make that short-term profit. And so it doesn't matter if the economy is softening or strengthening. You want the short-term movement. If you're a retirement investor, you could care less about Wall Street, right? You want to focus on Main Street. When you go to work, do you walk down the street and see vacancies? Or when you go to work, do you see for help wanted signs? Do you see now hiring signs? Are your friends buying cars? Are you getting new neighbors because the house keeps selling for more and more money next to you? Or do you see foreclosure signs? Do you see cars being repossessed? Do you see retail stores closing their doors, right? So you're focused on that, and that's how you make decisions. Now, you're not going to do anything because the markets fell a little bit here. Keep in mind, the markets have been up for quite a while. You know, we all prefer a slower drop than what we saw today, but that's it. Right? That's all we have to work with, and so that's what we're doing. So what I want you to do, if you're a retirement investor and you're contributing to your 401k at work, maybe tomorrow you get paid and on your paycheck you're going to see how much money went to your 401k. Maybe you have an account with us, a Roth IRA or other retirement account, and you're setting up weekly contributions. By the way, you can do $5 a week if you want. Start saving for your future. Doesn't matter to me. When that goes through, when you get your paycheck or when your bank account shows you made that contribution, I want you to smile like you stole something because you did the right thing. When the markets fall, the biggest guys in the room, the Warren Buffetts, I'm not even going to name all the names, the big guys, we all know Warren Buffett. They laugh at you guys. They laugh at the retail public that scares easily. When you're selling off, they're in there buying. I can promise you, we see it every quarter. We're able to see exactly what they buy. So that's that. I just wanted to throw that out there to you. When you see this sort of thing happening, I want you to sort of calm down and push your way through it and get in there. Over the long run, this is what's going to benefit you. If you like to study the markets, go back to 2008. Great example of Wall Street versus Main Street. Wall Street cratered. Main Street was fine for a little bit, and then all of a sudden Main Street started going down. When Main Street started going down, Wall Street was already recovering. It was too late. If you wanted to get on that investment thing, you missed the bottom. Wall Street will always respond first. So with that in mind, let's take a look at the markets. I didn't mean to get on a rant, but here we go. We got the Dow down 1,034, the S&P down 100, the Nasdaq down 274. Those are big numbers, okay? That's no joke. But after hours, while I've been talking here, giving you that little speech, the markets have already started to recover, okay? Which tells you people have panicked in the short term going into the close, and they're already seeing a discount. So not a lot, but they're trying to buy it up. Here's the thing. My prediction, I don't think we go under that low that we saw the other day. I think the market is settling into a range here, and it's just going to chop around for a while, whether you look at the Dow, the S&P, or the Nasdaq, right? It's just going to chop around. It's going to be a little scary, and it pisses me off because nobody's talking about the government shutdown. That's what's really important. That's what could really be the big deal, but everyone's going to talk about Wall Street and, you know, Trump this or that, and they're not even focused on what's important. Side topic, don't mean to get off on a side topic. Let's talk about some stocks and stuff that you may be interested in today. Tesla did sell off. This is kind of a scary story in the short term. Now remember, Elon Musk, the board of Tesla just voted that Elon Musk would only get paid, I mean, he's not getting paid a penny. He's only going to get paid if he meets the goals that they put out for him, and one of those is the Model 3 production goals. Now they came out with earnings, and they said we're planning on meeting those expectations, but the problem is they lost the most amount of money ever. Now, it was still less than what Wall Street expected, so that was kind of good news, right? They thought they were going to lose a lot. They did lose a lot, but not quite as much as the analysts had predicted. It was still their largest loss ever for a quarter. So, I mean, rockets are going up in the air, there's solar stuff going in Home Depot, and Tesla's behind on their Model 3, but they can't seem to make any money, and there's a lot of people that think they never will. So for now, that's what Tesla's responding to. Earnings, you know, not as bad as expected, but still very bad. Twitter, this one's interesting because we just talked about Snapchat yesterday. Snapchat popped on great news that everything was going well. They're starting to bring in more revenue and they're fixing their platform. Twitter came out with earnings today, and they sort of responded by saying, yep, our growth is good too. Our earnings, revenue, both better than expected, and our average daily users on Twitter is up 12%. May not sound like a lot, but we're talking about tens of millions of people here. So Twitter doing well, breaking out to new highs. Very, very strong move. I want to stop for a minute on BlackRock, and this is going to follow up with my sort of discussion here. BlackRock was down on the day, as was basically everything else, but this is another one of my discussions here to kind of follow up on what we did in the beginning. BlackRock, they came out and they said, we are going to start a fund very similar to Berkshire Hathaway, which we know as, that's Warren Buffett's company. They watched Warren Buffett, they've seen what he's done over a lifetime, and BlackRock, already the largest asset manager there is, says, you know what, we're going to raise another $10 billion. We're going to do exactly what Warren Buffett is doing, give or take a little bit there. That just goes to show that these guys are preparing for the markets to come back, and they plan on buying. They plan on diving in there. Why? Now you know, because there's nothing wrong with Main Street. Wall Street is scared. Main Street, they're all fat and happy. Everybody's got a brand new car and, you know, fancy haircuts and stuff. I need one, but that's the point that I'm making here. They're going to do just like Warren Buffett. So they're raising $10 billion. If you're interested, you got $1 billion or $2 you want to invest, go on over to BlackRock and give them some money. They're going to invest just like old Uncle Warren. Last stock of the day. Have you heard of a company called Coty? C-O-T-Y. You probably haven't, but here's what they do. First of all, they were up 14% today. Earnings, revenue, everything's great. Again, this is another story about Main Street. Do you know what Coty does by chance? Look them up when you get a moment. I looked them up just to get all these brands from you. This is only a few of the brands of what they do. They make cosmetics, the makeup stuff. They make the skincare creams. They make fragrances. And when you think you're buying that Gucci fragrance, these are the guys that make it. When you think that you're buying Burberry cologne or perfume, it's them. They make it. When you buy CoverGirl, Burberry, Calvin Klein, Gucci, Boss, Tiffany, Clairol, Playboy, Katy Perry, Lacoste, and Nautica, it's these guys. They're the ones making it. The point is, they make these fragrances, sell them to the companies, and then those companies like Nautica go out and charge you tons of money for buying it. Well, here's the thing. To further illustrate my point that Main Street is just fine, most of the success of their last quarter came from their luxury brands, your Burberry, Calvin Klein, things like that, because you guys are willing to spend $400 on 0.8 ounces of something that you could just go get at the flea market and smells the exact same. So that goes to show they're doing great. Stock was up 15% today in the wake of this obviously scary downside. It shows that the stock market volatility is nothing more than people freaking out. Some bad news for you. 165 of the 500 S&P stocks are now down 10% or more. That officially means a correction. So it's just a fancy way of saying stocks down 10%. You say they're in correction territory. 343 of them now are within 1% of being down 10%. Just goes to show a lot of these stocks are selling off pretty violently. Is it a big deal? Time will tell. It's only a big deal in the short term if you're investing for the short term. If you're investing for the long term, this is a discount, right? This is an opportunity, just like Warren Buffett's going to start doing. You will see him on TV soon saying this is kind of overdone, or he'll say something like everything is still good and that they're still buying. It's just the way it works. It's the way people think. Well, hey, anyways, I hope you enjoyed this. Don't forget to check us out, Wine and Wealth, if you're a client of Jazz Wealth. If you are not a client of Jazz Wealth, hey, what are you waiting for? We're doing something different here. We'll help you with your retirement investments. We'll help you understand your personal finances, and we will walk you through all the stuff you need to make those two work well together. Be sure to check out these videos up here above if you get a moment. Subscribe to our channel. Love that you guys are subscribing. It seems like you like me. I don't know. Try to be honest with you guys, but be sure to check that out. Help us subscribe and everything. All that good stuff, and we will talk to you again for tomorrow.